What's good, y'all? This your boy DCPRT, and this video is for the new traders out there who want to know the #1 strategy for new traders. This strategy is very easy. It would take a little patience, and all you need is a VWAP indicator and moving averages. What is the VWAP? The VWAP is the volume weighted average price, and it basically means, the volume weighted average price, the VWAP, is a measurement that shows the average price of a security adjusted for its volume. It is calculated during a specific trading session by taking the total dollar value of trading in the security and dividing it by the volume of the trade. The formula for calculating VWAP is cumulative typical price x volume divided by cumulative volume. Basically, just supply and demand. Whenever it gets to that line, it's a lot of supply and demand there. It's a lot of traders sitting right there, exchanging hands, and it's a powerful tool to have. If you want my VWAPs and my moving averages, I call it my indicator lines. I tweak the settings on it just a little bit, to my liking. If you want those from me, just contact me at dcprtprofit@gmail.com. I use Thinkorswim as a broker. That's where I use my indicator lines at. They got other brokers and other platforms that have VWAP, but the VWAP I use for my settings that I use on those lines is on Thinkorswim. So I'm gonna give y'all some examples on why it's the #1 strategy you need to use as a new trader so you can be profitable in the stock market. So let's dive into these charts. So you got this one stock right here called ORIC, ORIC. As y'all can see, this stock is trending up, right? As y'all can see, my lines right here, I got 4 lines. These 2 lines right here, the green and the red lines, are my VWAPs. I got 2 VWAP lines. A lot of people only have 1, but I got 2 VWAP lines. And then these bottom lines right here is my moving averages lines right here. All 4 is effective, as y'all can see. But how to use this strategy if you're a new trader? Like I said, it takes patience. So as you can see, when the market opens at 9:30, right? Stock goes up. You can get in right here if you want to, but patience is the key, man. You want to wait for this stock to come all the way down to the line and bounce off of it. So an entry could be like right here. You wait for it to come down, boom, to the red line. Nothing is exact. It came down under a little bit, but it reclaimed it. You can wait for a reclaim. You can go long, and then boom, came back down again to the blue line and bounced off of it, as y'all can see. So you basically just waiting for the dip, man. Wait for the dip to go long, right on the line. You wait for it to come to the line, and you buy it. And then your risk will be under that. Your risk will be under that line. So if it goes under it and it stays under it, I will cut my losses. But if it bounces, then you should be in the money. But just wait on it to touch that line. Okay, here's another example. You can go short. Same example, it's just inverse, right? So it tanks, right? And it comes up on the lines right here. You can start building a position right here, short, for it to come back down. See, it comes back up. You go short right here, comes back down. You just being patient. You just waiting. Okay, if you're a new trader, right? You want to get in through all this action right here, but wait. Just wait for it to go to the line. Just wait for it to come back. This the safest trade possible right here, to get in. So if you get in right here, close to this line, you set your risk. If you go past the line, you get out, take a loss. But a lot of times it's gonna bounce right back off of it. See, you'll be in the money right here if you're short. Here's a high price stock right here. This Bank of America right here. As y'all can see, big rip. It comes down, pull back. Where it come down to? These lines right here. You can just build a position right here, go along right on the lines, and boom, it bounces. You'll make some profit right here. Came back down to it, still bouncing off of it. See, it's hard. Once it's over the lines, it's hard to crack under it. And once it's under the lines, it's hard to crack over it. So, you know, it's a safe strategy. You know what I'm saying? It's a safe trade if you just be patient and wait for it to come down and touch these lines right here to build a position and go long, and then take your profits up here if you want to. Or, you know, if you want to hold on to it, you can do whatever you want to do. But as long as your stop is when this stock goes under the lines, that should be your stop. You know what I'm saying? You can give it some room because sometimes it do crack under it just a little bit and reclaims. What I like to do is, you know, if it crack under and it holds under, then I'll cut my losses. But a lot of times it'll crack under and then it'll reclaim. Like I said, it's all about being patient and just waiting for that line, man. It's a simple strategy. It's easy. You're just waiting for the stock to come down and touch that line, man. That's it. All this extra BS you see right here, what it's doing, do not worry about it. Just wait for it to come down to that line, long or short. That's all you have to do. Let's give some more examples. See, it even works on the SPY. This is a SPY right here. Big rip, comes all the way down to the line, boom, bounce off of it. You can build a position, go long. Now sometimes it may crack through the first, but you got all four lines sitting right here. Sometimes it will stop on the blue, sometimes it will stop on the purple, green, red. It all depends, man. Like I said, nothing is exact in the stock market. All you can do is just stop out. You can get back. You can always get back in if you're wrong. So say if you wanted to build a position long off the blue lines and it cracked through, you just cut your loss. And if it holds the last lines, you can go back long. You know what I'm saying? It's a simple strategy, man. That's why I say it's the #1 strategy for new traders, because you don't really have to do too much thinking. You just have to just wait for it to hit that line and then base your stop off that line. That's it, man. That's basically it. I gave like 4 or 5 examples. You know, it worked for any stop. You know, small caps, big caps, it don't matter, man. As y'all can see, this is SPY, and you know it's bouncing off the lines right here, off the green line right here. You know, look, this is Chase Bank, JP Morgan Chase, right? Huge stop, man. It's in the 130s, right? Look, came down, bounced off this purple line. Nothing exact science, but you know it bounced off the purple line. It bounced up. Just wait for that pullback. Came down right to the T, to this red line, and bounced. You build a position right here where these lines at. You base your risk under here, and what it do? It bounce. You can make money. That's it. That's it. You know what I'm saying? Hope y'all learned something right here. Like I said, if you want my indicator lines, I only use Thinkorswim. Just contact me at dcprtprofit@gmail.com. I don't want to make this video too long. I may have a second video explaining the same thing, more detailed, but I didn't want to make this video too long. I just want to get straight to the point and let y'all know, you know, this is a nice strategy for new traders, and you can use it to your advantage, man, and try to bank in the market. So I'm gonna have more videos putting y'all on game about some things, and check out my videos and my trade recaps, and subscribe to the channel, like it, comment what you think. If you got any ideas or anything like that, just let me know in the comment section. I'll make a video on it. And that's it for this video. I'm gone. Peace.